Welcome to the deep dive. Today we're diving into something pretty crucial to India's economy, women and their financial inclusion.
Yeah.
We've got a ton of really interesting research for you all today. It shines a light on kind of the current situation, the barriers that are there, and just the sheer potential waiting to be unlocked. So our mission today in this deep dive is to go beyond just the surface level, beyond just the numbers. We're going to really try to grasp the scale of this whole issue, understand what's holding things back, and explore the really exciting possibilities that are ahead.
Right. And I think often the conversation around financial inclusion kind of stops at, basic banking access.
Yeah.
But what our sources reveal, I think, is something much bigger and kind of paint a picture of, this vast wellspring of economic energy that's not being fully tapped into.
Yeah, and to that point, just the sheer size of this is pretty astounding. We're talking about a figure that basically equals India's entire education budget every single year.
Wow.
A staggering 15 trillion rupees. The BCG Consumer Insight Surveys from 2023, they noted that women actually influence almost 70% of household consumption decisions.
Huge.
Think about that for a second.
Yeah.
So much influence, right?
Yeah.
But a systematic exclusion from the financial decision-making that could really amplify that.
Yeah.
This is a massive, massive untapped opportunity, especially in the developing world. So, okay, let's unpack this a little. Where do we actually see this exclusion most clearly? Where's the hard data on this?
Yeah, I think when you look at participation rates across different kinds of financial activities, the imbalance is pretty striking. So, for example, the RBI's Household Finance Survey from 2023, they tell us that women actually control 40% of India's household wealth.
Oh, that's a lot.
But they're only at the helm of 23% of investment decisions.
So they have a ton of the resources, but not nearly the same level of control over how those resources are actually directed, right?
Exactly, yeah. And when we look at maybe more active involvement, in financial markets, the contrast gets even sharper. The NSE Retail Investor Analysis from last year, 2023, found that only 18% of women are actively trading in equity markets, buying and selling stocks,
Right.
compared to 52% of men.
Yeah, so that's a massive difference, right?
Yeah.
And engagement with those kinds of assets that can really build wealth.
Yeah.
And this isn't just about direct stock trading though, is it?
No, it's not. This pattern of underrepresentation continues kind of across the board, when it comes to investing. AMFI Investor Metrics, again from 2023, shows that women make up only 24% of mutual fund account holders.
Right, so across the board, a lot less involvement.
Yeah, less involvement in actively, managing those household finances and making those key decisions about investment.
Okay, so we've laid out the disparity in who's participating, but let's get back to that big 15 trillion rupee figure. How do we get to that number? Where's that massive economic loss coming from piece by piece?
Yeah, it's not, from just one place. It's really a combination of factors. But our sources break down some key components here.
Okay.
The first one we can kind of call trapped capital.
Wow.
So SBI research from 2023 found that women in India hold a massive amount in savings, 32 lakh crore rupees every year. Every year, which is enormous. But the Crystal Women's Wealth Report, also from last year, points out that 71% of that is sitting in, safe, but typically lower growth things like fixed deposits in gold.
So it's essentially sitting there, not really working to generate further returns.
Exactly. Yeah. It's not really participating in the same way. And Crystal actually estimates that the missed opportunity from that preference for those more conservative options is something like 8.5 trillion rupees.
Wow.
In unrealized returns over a 10-year period.
Oh my gosh.
So the takeaway here, I think, is, it's not just about having savings. It's about investing them strategically for women to truly kind of grow their wealth and participate more fully in the economy.
That's a huge number, 8.5 trillion, just that alone.
Yeah, just that alone, yeah.
What's next? What's the next piece of this kind of economic puzzle?
So the second piece is what we call the missing multiplier effect.
Okay.
UN Women India, they did an economic impact study in 2023, and they found something really interesting. It's about how men and women reinvest any gains that they make on their investments. So women tend to put a much larger portion, 82%, back into things like family, health, and education, compared to 38% for men.
So this is suggesting then that when women have more financial power, the benefits extend far beyond just their own individual wealth.
Absolutely, yeah.
It impacts, their families, their communities, the well-being of everyone around them.
Yeah, you have these ripple effects. It benefits everyone.
Yeah.
And right now, the women who are investing, they generate about 2.8 trillion rupees every year in those kinds of household reinvestments.
Wow.
Now, McKinsey Global Institute, they did a study. They estimated that if you had equal participation from women, this number could jump to 7.2 trillion.
So it's not just about lower investment returns. It's a missed opportunity for societal progress.
Exactly, yeah. Impact on health, on education. It really is a broader societal loss when we don't have that full participation.
And then what's the final piece of this kind of economic hit that we're talking about?
So the final piece we call the innovation gap. The IVCA Women Founders Report from 2023, they pointed out that startups founded by women only receive about 5.2% of venture capital funding.
That's a tiny sliver.
Tiny. But despite that, those same startups actually deliver a 35% higher return on investment.
So there's potential there. And I think maybe a little bit of unconscious bias, maybe?
Right. Maybe. Yeah, exactly. There's this untapped potential.
Yeah.
And beyond that, Ernst & Young, they did a fintech survey last year, 2023, and they found that financial products specifically designed for women represent only about 7% of new offerings.
So a missed opportunity to create solutions that actually fit, right?
Yeah. Exactly, yeah. It could also lead to even better returns for the financial industry itself.
So 15 trillion rupees, that's capital not growing as much as it could, massive missed opportunity for reinvestment in families, in society, and then this lag in innovation really paints a clear picture of the cost of this. So let's dig into the why. What are the biggest roadblocks that are preventing more women from, fully participating in making these financial decisions?
Yeah, our sources highlight several key barriers. The first one, I think we can kind of call it knowledge asymmetry.
Okay.
The SEBI Financial Literacy Survey, they did it in 2023. They found that only 23% of women feel confident in their understanding of market investments compared to 58% of men.
That's a huge confidence gap.
Huge, yeah. And when you look at where women are actually seeking their financial guidance, NFHS 5 extended data, they found that 48% of women are relying on male family members for that advice.
So it's well-intentioned, I'm sure, but it might also be perpetuating, some existing biases or limitations on growth.
Right, exactly, yeah. Are they getting the full picture? And then on top of that, the NABARD Financial Inclusion Survey, also from 2023, they found that financial literacy programs, they only reach about 12% of urban women and a tiny 4%
Wow.
of rural women. So there's just this gap in even the foundational knowledge.
So lack of knowledge, lack of access to education, that's a big piece of this puzzle.
It is. And then the second barrier we see pop up is what we call cultural constraints.
Okay.
The NISM Behavioral Finance study from 2023, they found that 72% of the women they surveyed said family disapproval was a reason they didn't invest independently.
Oh my gosh. That's really telling.
It is, right. It says a lot about the social pressures and norms that can hold women back.
Yeah.
And IMB Gender and Finance Research from 2023, they found that 65% of married women said they leave those investment decisions to their husbands, even if they're earning their own income.
Right. So they're contributing, but they're not controlling.
Exactly, yeah. And there's still this kind of discomfort around discussing money matters. A DBS Bank India survey found that 58% of women under 35 even felt that discomfort. So
it's across generations.
it is, yeah. It seems to be pretty pervasive.
Wow. Okay, so cultural constraints, they're really hard to overcome because they're so deeply rooted, right?
Yeah.
What's the last kind of category of barriers that our sources are talking about?
So the last set of challenges, we can call these systemic barriers.
Okay.
They're kind of baked into the financial system itself. The AMFI Industry Report 2023 found that only 12% of financial advisors are women.
Oh, wow. So there's not a lot of representation there.
No, it can make it harder to find someone you connect with, someone who you feel understands your needs and your perspective.
Someone who looks like you.
Exactly. And then, Nielsen did a really interesting fintech UX study, 2023, and they found that the way investment platforms are designed, like their user experience, it's actually tested better with male users 68% of the time.
Oh, interesting. So maybe not as intuitive or user-friendly for women then.
Right. Yeah, exactly. Potentially. Yeah. And then, if you look at the marketing, who are they showing in these ads?
Right.
Kantar Media Analysis 2023, they found that 73% of the time, it's male characters.
So there's this perception, right, that it's a man's world.
Exactly. Yeah. It can subtly reinforce that message.
So from lack of knowledge to these cultural norms to the industry itself, Lots of layers here.
Yeah.
But not all challenges, though, right?
No, not at all. There are definitely some bright spots, some initiatives that are making a real difference, and I think offer some valuable lessons.
Yeah, tell me about some of those.
Yeah, so a great example is SBI's Women in Wealth program.
Okay.
They worked with 12,000 women across 15 cities between 2022 and 2023, and after 18 months, they saw some really significant outcomes.
That's a lot of women.
It is, yeah, and the outcomes were really promising. So 67% of them actually opened what are called DMAT accounts, which are, those are essential for trading in the stock market. They hold your shares in electronic form. And 82% of them started systematic investment plans, or SIPs,
Okay.
which is a way to, regularly invest a fixed amount every month. It helps build that habit.
Yeah.
And what's really cool is that their average return on investment was 14.2% compared to the market return of 12.1% over the same period.
So they're doing better.
They're doing better, yeah. It shows that when you provide the right support, the right knowledge, they can really thrive.
That's a great outcome. Any other examples of these kinds of initiatives?
Yeah, there's Access Bank's Her Money initiative.
Okay.
This is a digital-first platform designed really specifically with a user experience that caters to women's needs. In their first year, they got something like 230,000 new accounts.
Wow.
And they had a 78% retention rate, which is huge compared to the industry average of 45%.
Wow.
So it really shows the power of creating something that resonates, that speaks to that specific audience.
Okay, so these are encouraging.
They are.
They show that progress is possible. But what does the path forward actually look like? Where do we need to focus our energy to get this greater financial inclusion?
Yeah, there are a few key areas. The first is what we call an education revolution.
Yeah.
It's about making financial literacy just a standard part of the curriculum.
Yeah.
In girls' schools, as they're doing in that CBSE pilot program from last year, 2023. And we need to leverage, mobile-first learning platforms that can deliver content in regional languages.
To reach more people.
Exactly. Make it accessible. And peer-to-peer learning, I think, is really powerful, right? Where you have experienced women investors who can kind of mentor and guide others.
Yeah, share that knowledge.
Absolutely, yeah. And then the second key area is really product innovation.
Okay.
We need to see more investment products that consider women's specific values and priorities.
Yeah.
What are sometimes called gender lens investment products. More flexibility, too. Tools that can kind of account for, potential career breaks that women might take.
Yeah.
And then, for broader reach, especially in rural areas, things like voice-first interfaces.
So thinking about the different ways people access information.
Absolutely, yeah. Making it more accessible to everyone. And then, of course, the cultural and systemic barriers. We need to address those as well.
Right. Those are the harder ones.
They are. It requires kind of a cultural transformation.
Okay.
More media partnerships that showcase women investors, corporate mentorship programs to provide guidance within those professional environments, and community-based investment clubs, where women can connect and learn from each other.
Yeah, create a network. Okay, so it sounds like we need this multi-pronged approach.
Right. That's it.
Tackle this from all angles.
Yeah.
But as all this is implemented, how do we know if it's actually working? What are the signs of progress? What should we be measuring?
Yeah, there are several key performance indicators, or KPIs, that our sources point to. We should be tracking the rate of women's participation in the equity market. Are they buying and selling stocks?
Right.
The gap in mutual fund ownership between men and women.
Right.
The average returns that women are seeing on their investments.
Right. So not just participation, but the quality of that participation.
Exactly.
Okay.
And then, are those financial literacy scores improving? Are they making those independent decisions?
Right. Yeah. That agency is so important.
It is, yeah. It's about empowering them to not just participate, but to really succeed.
Okay, so to sum it all up, this deep dive into women's financial inclusion in India, it's shown us it's not just about fairness, it's not just about equality, although those are incredibly important.
Right.
This is about the economic well-being of India.
Yeah, it's about unlocking the potential of half of the country's, intellectual capital and wealth creation.
15 trillion rupees.
15 trillion, yeah.
And every month that we delay, it's costing the Indian economy an estimated 1.25 trillion rupees.
That's enormous.
It's enormous.
Yeah.
So this is urgent. And, I'm reminded something that Dr. Arundhati Bhattacharya, the former chairperson of SBI, she said, breaking the silence around women and wealth, it isn't just about equality. It's about economic common sense.
I love that.
It really makes you think, what else are we not talking about?
Yeah.
What other factors are shaping the landscape in ways that we may not even realize?
Lots to consider.
Yeah, a lot to think about. Thanks for joining us on this deep dive.
Thank you.
We'll see you next time.